Hello, my name is Kyle Borgert, and this is an introductory video to discuss the costs and financial parameters in the Integrated Environmental Control Model. I'm assuming that you're already familiar with creating and saving sessions in the IECM and that you are comfortable with basic navigation of the model. So let's begin by starting a new pulverized coal power plant session and then naming it PC Cost Demo. We'll select a default plant configuration which meets the emission requirements for the new source performance standard for this demonstration. Before we get into the finer details, let's jump to the Get Results tab to see what cost-related outputs are available. Under the Overall Plant tab, we will first select the Cost Summary bottom tab. Broken down by plant component, you can see that there are 4 columns of results. They show the total capital requirement in millions of dollars and on a per kilowatt net output basis. Also the total annual revenue required on $1 million per annum basis. And lastly, on a megawatt hour basis. The last value at the bottom here is also known as the levelized cost of electricity. As shown at the bottom, all these costs are in constant 2010 dollars. The costs just above the subtotal are for the air pollution control systems at the plant, and the items just below the subtotal show the base plant and water system costs, as well as any emission taxes. The base plant currently represents the largest of all costs presented. Selecting the Total Cost bottom tab gives a more detailed breakdown of the total annual revenue requirement, again disaggregated by major plant component. From left to right across your screen are fixed, variable, and total operations and maintenance costs presented in millions of dollars per year. The next column presents the annualized capital requirement for each component. Then in the rightmost column, the annual capital and O&M costs are added together to give the total annual cost in millions of dollars per year. These all represent levelized annual costs, which we will discuss in more detail shortly. To see where these numbers come from, we just need to go back to the individual plant components. For example, if you look at the total annual cost for the SO2 control system on line 5, you will see the same values on the Total Cost bottom tab for the SO2 control results. We can further decompose these cost results by looking at other tabs. For example, on the O&M cost tab, we can see the breakdown for fixed, variable, and total operations and maintenance costs. If I now select the Set Parameters top tab and go to Overall Plant, we can examine where the variable costs for our plant come from. If I select the O&M cost bottom tab, a list of cost parameters is presented. These show the unit cost for all plant consumables such as ammonia, limestone, and water. You may change these default values to suit your needs by unchecking the calc function and then manually entering your own unit price data. Another item on this list shows the operating labor rate, which is used across the plant to calculate labor costs. The first 2 rows show the assumed price of electricity used within the plant by each component. The default value is base plant COE, but you can choose to specify other values. This price is an artifact that's used solely to allocate the total plant cost to individual components instead of a more rigorous comparison of plants with and without that component. The technical documentation of the IECM explains this in more detail. Finally, on the last line, there's a real escalation rate, which has a default value of 0. This parameter is used to specify an annual % increase in operating and maintenance costs over and above the rate of inflation. If a non-zero value is specified, it increases the annual O&M costs for all plant components every year over the life of the plant. Future versions of the IECM may allow you to choose different real escalation rates for different terms, such as fuel and other consumables. But for now, there's just a single rate that applies to all O&M costs, so it should be used with care. If you now select the top tab for any plant component, you'll see at the bottom another set of tabs that include capital costs and O&M cost. Each of these screens has additional parameters that are used to calculate the cost of that component. The cost categories on these screens are standard items specified in the Electric Power Research Institute's Technical Assessment Guide. We won't go into the details here, but you can find the information in the IECM user manual if you are not familiar with it. Let's now turn our attention back to the Overall Plant tab, and this time select the Financing bottom tab. This screen has several important parameters that are used to calculate annualized costs, as well as the value of all costs that are reported by the model. The first row parameter provides a drop-down menu of years in which costs can be reported, which are based on the Chemical Engineering Plant Cost Index. For this example, we'll keep the default value of $2,010. The second row asks whether we would like to have costs reported in constant or current dollars. Constant dollars exclude the impact of inflation, as opposed to current dollars, which are actual amounts paid or received when inflation effects are included. Economists sometimes use the term real dollars instead of constant dollars, and nominal dollars instead of current dollars. Generally speaking, short-term studies are often conducted using current dollars, as it more closely approximates the actual cash flows, whereas constant dollar analysis is typically used for long-term studies so that the effect of many years of inflation does not distort costs to the point where they bear little resemblance to today's experience. The IECM uses constant dollars as a default because we feel it provides a clearer picture of the real cost trends associated with the chosen plant design or technology. But if we instead choose a current dollar analysis, a new line appears on the screen to specify the assumed annual inflation rate over the life of the project. But for this analysis, we will stick with constant dollars. The next two items on the list are the pre-tax discount rate and the after-tax fixed charge factor. These values can either be specified by you directly, or the IECM will calculate them for you if you specify all of the remaining financial parameters. These two parameters are highlighted in blue because they are essential to calculating the annual carrying charge portion of the total revenue requirement, or in other words, the portion of the total plant capital requirement that has to be recovered each year from electricity sales in order to pay off all construction costs, along with interest payments and a return on the investment. In some economic texts, this is also called the capital recovery factor. In the IECM, the calculated values of these financial parameters are based on the EPRI Technical Assessment Guide methodology, which is a widely used industry standard. If you're not familiar with any of these terms, you might first want to read the IECM technical documentation, which explains these terms and calculations in much more detail. So now let's look at the next cluster of parameters. The plant or project book life is a key parameter that's used with the discount rate to calculate the fixed charge factor above. The default value of 30 years is typical for regulated utilities, but in many cases it could be shorter. The next three parameters specify the real interest rates or rate of return for the three financing options available in the IECM: borrowing money by issuing bonds, or raising equity capital by issuing preferred and common stock. Note that even if you select a current dollar analysis with an assumed inflation rate, these rates of return still have to be specified on a real basis, excluding inflation. So these values will typically be lower numerically than rates given in current or nominal dollars. The next three parameters then specify the fractions of total financing that come from each source. These fractions also can change depending on your investment perspective. The last item, common stock fraction, is shown as calculated, simply to be sure that all three percentages add up to 100%. These three sets of interest rates and fractions are then used within the IECM to calculate a weighted cost of capital, which is another term for the before-tax discount rate on line 3. But while the rates of return are always specified in real terms, the discount rate on line 3 is shown in either constant or current dollars, whichever you chose. The same is true for the fixed charge factor. We can see this simply by selecting current instead of constant in the menu. This brings up the additional line that I told you about with a default inflation rate of 3%. The discount rate on line 3 also now increased by about 3 points. It is not a simple addition, so you should see the technical documents if you want the exact formula. You see that the fixed charge factor also has now increased. Now let's set this back to constant dollars. The final cluster of parameters on the financial screen allows you to specify the tax rates for federal and state income taxes, and also input any investment tax credit that may apply to your project. These tax rates, along with a straight line depreciation schedule, are used in the IECM to calculate the levelized fixed charge factor, which is the value shown on line 4. Details of these calculations are explained in the IECM technical documentation, and as noted earlier, they are based on EPRI's Technical Assessment Guide. Finally, going back to where we first began, in the Get Results tab, and then selecting Overall Plant and Cost Summary bottom tab, we can see how the financial parameters we just looked at affect the overall revenue requirement of the plant. We see here in the first column that the total capital requirement for the plant is about $1.1 billion. The value of the fixed charge factor back on the Set Parameters screen was 0.1128. If we multiply the total capital requirement by that fraction, the result is an annual cost of $124.6 million, which is the value reported under the Total Cost bottom tab, as you can see here. When this sum is added to the annual operating and maintenance costs in these other columns, we get the total annual cost shown in the last column. And finally, if we divide this by the levelized number of megawatt hours generated each year, we get an overall levelized revenue requirement of $57, which can be seen here. It is important to remember that this value represents the wholesale cost of electricity generation at the plant, and not the price that will ultimately be seen by consumers in a particular region. We hope this review has been helpful. Thank you for watching.